All right, KC International is the stock that we're talking about next, and it is in focus after the order intake in the overall pipeline remains robust. Civil execution continues to face labor and front availability challenges, though, and in the Middle East tender environment, they're staying active, and this is through marquee projects as well. Let's bring in Puneet to tell you more about what is happening with this company before we speak to the management. Puneet, what are you picking up?
Well, thank you for that, Alex. It's definitely been a tough time for the infra players. Now, we've been looking at the exposure of Middle East for all these companies. For KAC, currently it stands around 20%. But there'll be three key things I'll be watching out from this conversation. One will be, what is the status as is? Is the work currently at pause, or have some projects been continuing even at this point of time? That'll be the first key question. The second one, an important one, is on fixed price of the contracts or the order wins that they've had over the last few years, which are getting executed now. What is the percentage? Because for its larger pair of KAC, that's almost 55% in terms of the fixed price contracts. So that won't be able to be passed on in terms of price hikes, if any. And could impact margins. What is that for KAC? That'll be the second key aspect. And thirdly and finally, in terms of the order wins in the recent time frame, the last couple of quarters, is there scope for negotiation of passing on those similar price hikes and putting those into the contracts? This will be some of the key aspects. While the company has been winning orders in India as well as abroad, I think right now, given the global uncertainty, execution is something that we're focusing on in this chat.
Okay. Vimal Kejriwal, Managing Director and CEO, KEC International, joining in now on the show. Mr. Kejriwal, very good morning to you. I think the big question really on everyone's mind is exposure to the Middle East and to these nations. Can you just start off by giving us your sense of what is going to be the impact there? What is the extent of exposure?
So, good morning, Tamanna. If you look at our exposure, we have an order book of close to around, I think slightly about 10,000 crores, which is roughly around 20 to 25% of our entire order book. Primarily, we are in 4 countries, largest being Saudi, then UAE, Oman, and Kuwait. If you look at what is happening on the ground, and I presume that's your next question, is that Saudi, I'll say almost all the projects are, as of now, going on very well, except 1 or 2 projects which are very close to the refineries and all that, where we are going a bit slow. Oman is going on well. Kuwait, we have almost finished the project. I think UAE is where we have a situation of stop and start. So some of the projects are going on very well. There are other projects which are closer to the, let's say, a data center or a crude refinery or a oil field, etc., where we keep on getting orders to stop and start. So whenever there's something, then they say, okay, why don't you stop for some time? Then you again restart. So I think UAE is the only place where we are having some physical challenge in terms of stop and start. Also, we have a factory in Dubai, which has been going on well. We stopped it, I think, for 1 day or 1.5 days at the start of the war when they said that why don't you stop it? But now it's been running well. So in terms of, I'll say, project revenues, on the ground, there will be some impact, but it would be marginal in terms of the physical execution piece.
Kejriwal, thank you for that detailed response. But can I ask you to quantify the proportion of order book which has exposure to countries which are now at the receiving end of missiles and drones right now?
So I said it's around 22% or something like that. Roughly, we are at around 10,000 and odd in terms of the order book to these 4 countries. And okay, that's where the exposure is.
Okay, yeah. Okay, understood. And is there any kind of indemnifying feature in your contracts in these countries? Is there any kind of insurance that covers for war? I'm just trying to understand, if things get worse, how does it pan out for you? Because right now, it doesn't seem like things are improving anytime soon.
So a couple of things are there. One is obviously you have a force majeure clause, which is there once work stops on account of war and such a calamity. So that contractually there you are protected from the client side if the work is stopped and you're incurring extra expenditure, etc. So that's one part of it. Secondly, you always have a what you call an all-risk insurance with all your projects. So if there's any damage to any material or something, you are always covered by the insurance. So I don't think any loss of material and unfortunately, if anything happens on the manpower, is not covered by insurance. If that's the question.
That may, even if that was not the question, just like to get the detail, Mr. Kejriwal, you are saying that not everything is insured, are you?
No, I didn't say that. I said that we have an insurance both for material as well as for people.
Okay.
So I'm not worried about. Plus, I said contractually we also have a force majeure clause.
Got it.
So in case, let's say your overhead expenses, they are not covered by insurance in that fashion. Okay, but then they'll get covered by the client force majeure clauses.
Fair point. Mr. Kejriwal, this might be almost an impossible time to have conversations with clients, but I mean, in terms of everybody knowing things. But what are these conversations like? Because I'm sure you are talking to your clients and your clients are talking to you. What are the conversations like? Are people on pause mode until things clear, or what are the conversations like?
So to be fair, right now, everything is on pause.
Okay.
So right now, people are talking more about protecting what they have. Like I'll tell you for a simple example, we were doing a shutdown work in one of the countries, and they said, please return the shutdown because we want continuous power everywhere. Okay, so there is right now there's a pause mode because I don't think anyone is talking about the new projects or tenders today. We'll have to wait and see what happens. But typically, Niraj, what we have seen is that for us, war, which is not a good thing to say, but for us, war has always been an opportunity going forward. Once the war stops, there's always a reconstruction, etc., happening. So we are looking at, in a way, a more positive scenario going forward. And with the oil going where it is, I think there were questions earlier that saying oil is at a lower price at 60, 65. What will happen to Middle East? Now with oil more than 100, I do hope that will add to projects coming forward.
This is an important point, guys. I mean, if oil prices were to stay high, not at 60, I'm not saying they stay at 120. Hopefully, they are settling lower. But even if they are, let's say, $90 per barrel, the revenue situation of the Middle Eastern countries, which are exporting oil to the world, is better. And therefore, when the dust settles, they're in a better place to have some revenues to be able to deploy in infrastructure builds, which are great for some of these companies.
Either that or there's a glut when they can start moving out from Hormuz again. So it's...
Because the glut, if any, will stay for a short period of time, right?
Then you'll come back to mean where
hopefully the mean is lower, but we don't know that.
You can't predict at this moment. The only thing I'm saying is that if there is destruction of oil facilities itself.
That's the point, because when the oil facilities are shut, they take a long time to restart.
Yeah. That's true. Mr. Kejriwal, just a last word on the point of the opportunity. And I think that's an important point. Obviously, no one wants a situation like this to emerge. But once it does, clearly there is going to be a lot of rebuilding to do in these areas. Are you well positioned for those opportunities when they come by?
I presume we are. I think we are well positioned to do it. We had done the same thing earlier. It was in Iraq, etc. So I think we are well positioned. I think one more small point which I would like to make is if the war settles and all the sanctions on Iran are removed, what could also happen is that we have a lot of projects in the former Soviet Union. Let's say Georgia, Armenia, Moldova, etc. And today we are incurring huge logistics costs because the materials have to go through China, etc. If Iran opens up, if Chabahar port opens up, there are direct railway links, etc. So the entire former Soviet Union can open up to Indian companies in terms of logistics costs coming down significantly.
Mr. Kejriwal, just one last point, and this is Alex. I just want to understand, this is a developing situation, and so nobody is going to point fingers at you if outlook and all of that goes off. But I'm just wondering whether you will have to adjust your revenue targets, whether you will have to adjust your order book growth targets. You've said at the moment right now, everything is on pause in that market, and that accounts for 20% of your book right now. So are you adjusting your targets right now?
So I think we are waiting for it, but I am sure that there will be some adjustments. Some revenues will move in from Q4 to Q1. I'll tell you what is the problem. The problem is not on the physical progress at the ground. I think the problem is today a lot of our material for these projects come in from Europe. Okay, inspectors are not going, movement is not happening. So there could be supplies which are shifting from Q4 to Q1. Order intake target, I think it will be a little bit early to say what will happen to the order intake target. Maybe we may not give a target by March or something, but we'll wait and see. As I said, there could be opportunities, and as Tamanna said, the prices can come down. We'll have to wait and see. I think the other point which I would like to say is that almost all our projects are for specific purposes, either with wind farms or with oil fields, etc. So I don't have the risk today on my current order book of projects getting stalled because of cash not being available and all that. But we cannot say the same thing about tomorrow. I think it will be another 15 days or 4 weeks or 5 weeks whenever there is a clarity on the order book side. Revenue, yes, some revenue could definitely spill over from Q4 to Q1 because of postponement. The advantage as an EPC company is that I don't lose the revenue. The revenue will move.
That's a fair point. Mr. Kejriwal, on that note, thank you so much for taking the time. And we hope that your team in all of these locations stays safe. And we continue to pray for all of them at this moment. Thank you so much for taking the time.
Thank you. Thank you.
All right. Let's talk about